You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Welcome to Volatility Views, the premier program for volatility traders. Each week, we'll take a deep dive into the world of volatility with in-depth analysis, trading activity reviews, strategy breakdowns, cutting-edge education, and much more. We'll also bring you exclusive conversations with the traders, researchers, and asset managers who are reshaping the volatility landscape. If it involves volatility, then you'll find it on Volatility Views. Volatility Views is brought to you by MIAX, one of the fastest, most efficient trading platforms in the world. MIAX is proud to bring you Spikes Volatility products. Spikes options and futures are traded on the Spikes Volatility Index, SPIKE, offering pinpoint accuracy, radically faster dissemination, and a highly transparent settlement auction, all for ultra-low exchange fees. It's volatility reimagined. Learn more about Spikes at miaxoptions.com/spikes. Options and futures involve risk and are not suitable for all investors. The statements made are provided for informational purposes only and should not be relied on for financial or legal advice. And now, it's time to take a deep dive into the world of volatility. It's time for Volatility Views.
All right, everybody. That music means it is Friday. It is noon Central. It is 1 p.m. Eastern. It is time once again for us to get together and view some volatility. Yes, it is time for Volatility Views, the premier program for volatility traders. My name is Mark Longo from the ever-exciting theoptionsinsider.com, as well as, of course, the ever-compelling Options Insider Radio Network. Of course, you guys can listen throughout the week to all the fun stuff that we do on demand on just about any device under the sun. If you want to get more engagement, we, of course, have the plus for those of you who want to kick it up a notch, get all the live engagement, want to go above and beyond, you want to get some exclusive shows, then you go to the pro. Theoptionsinsider.com/pro is the place to go to kick the tires and light the fires. And, of course, however you get it, if you like what you hear, keep rating and reviewing it on your platform of choice. Just help all those new folks out there who are kind of scratching their chin saying, this volatility thing is a little weird. Helps them find their way to the program. And, of course, keep those questions and comments coming. We do love to hear from all of you guys and gals out there. And let's see who we're hearing from on the program today. First, let's go out to the dark and stormy land of Maine, where we are joined once again by the rockingest of lobsters, Mr. Andrew GIOVINAZZI from OptionPit.com, by way of the land of Maine. Mr. G, welcome back to the program, sir.
It's good to be back. It's been a while since I've been on Vol Views, I have to say. I've been stuck in the dark land, but I'm back.
The Rock Lobster is back, and you know who else is back, listeners? None other than Mr. Tom JARCK, the Vice President of Proprietary Products over there at MIAX, appropriately enough, holding down the MIAX hot seat this week. Tom, welcome back to Volatility Views, sir. It has been too long.
Thank you, Mark, and good to hear from you again, Andrew. I guess John Smolin had a little bit of a technical problem last week. So
we heard him briefly on the show. I think we heard him say hello, and that was about it. Then the storms decided no more.
Happy to be on the show today. Thank you.
So you have to do 2 weeks worth of duty here on the show now, Tom. So I hope you're ready as we head right on into the Volatility Review.
It's time to break down the latest developments in the volatility trading world. It's time for the Volatility Review.
All right, everybody, welcome to the Vol Review, the portion of the show where we do just that. We break down the week that was and indeed still is from a vol trading and trending and unusual activity and all sorts of perspectives. And coming into the end of the week, we got a bit of a mixed day. After a lot of green on the screen throughout most of the week, we got the markets kind of struggling to find their footing a bit today. We have come into showtime. We have NASDAQ leading the dance this time, up almost 0.25%. S&P kind of flirting with unch to slightly down. And then we got the Dow kind of in the other direction to the NASDAQ, off nearly 0.25%. All of this kind of mixed messages, mixed metaphors means volatility is actually kind of mixed. In fact, coming into today's show, we are almost exactly where we were at this time last week. Slightly moved in one direction or the other. We've got spikes coming into showtime was at about a 1675. That puts it up about 0.25 point from where it was this time last week. And VIX Cash coming into showtime was at a 1660. That's up 0.1 point. That's literally within our margin of victory here. That's the least we've seen VIX move on a week net in quite some time. So usually we come in here and we're in a completely different vol regime than we were the week before. But this week, not so much. Right back to where we were this time last week. VVIX even pretty much holding firm. It's at about a 107. That's down a whopping point from this time last week. So intriguing. We haven't seen this in some time. The market's kind of hovering out here. Let's see what's going on. Let's go around the horn. He hasn't been on in a while, so we'll start with Mr. Tom. Tom, what's been lighting up your tape in the world of volatility since the last time we spoke, sir?
Well, from the volatility perspective, it feels, market's been, steadily moving higher. Every day I feel like I read an article about a new high. But vols are remaining bid, relative. It seems as if the skew is still at all these crazy all-time highs, and not just off of them, but depends how you measure it. And just looking around, just looking at some of the cross-asset vols, just a screener that I have up. I mean, everything's been trending, sideways to a little bit lower. It feels like spikes and VIX are in this 15-20 range, and we're here for a bit. I don't know what that next catalyst is going to be to really break us out of that range, but I feel like there's a lot of things going on right now, obviously in the news, and we got the unemployment number out of the way today, but this whole the new it's going to be really interesting to see how things evolve with the COVID again. It just feel like more and more things are going backwards rather than forwards as far as openings and restrictions in offices, restrictions in travel. So it's going to be an interesting fall as usual. But I'll come back after let Andrew jump in since he hasn't been in a while. So I'll have him jump in. I'll come back.
Yeah, we are kind of sliding backwards on the pandemic front here in the studio, in the building where we have the studio here. We're back to masks everywhere and in the elevator and everything else like that. So yeah, bad old times are back again. Hopefully not for long. Doesn't seem though to be registering, at least for now, on the markets and indeed on the vol front. Let's go out to the land of Maine, where it's always bad old times. It's always dark and stormy. Mr. Rock Lobster, what's lighting up your tape out there as we hang out pretty much in the exact same zone this week that we were in last week, sir?
I believe a wise man said recently that 16 is the new 12. I don't know who that was.
I believe it was Warren Buffett, sir.
Yes, Warren Buffett. So I think that, like Tom was alluding to, like I think the biggest issue is, in regular, what I would call, let's just call it the good old days bull market when the Fed wasn't highly involved. You used to get like the vols could be driven down because there was some confidence and there was like that sort of forward look as far as rates and kind of now that the Fed has been, I would call, uber active in monetary rate shenanigans and all that kind of stuff, you don't have that seller of vol that you used to, that yield hunter selling puts. And I think it's one of the reasons why the longer term and most of the SKUs are pretty high, because you have to face it. The trade for the last year has been long equities, long. And if you have that on, you want. So right now, there's nothing to change that. So the Fed policy is still stay.
Like we're losing the rock lobster a little bit, so we'll get him back as we keep on rolling. Let's move on out to the land of the futures here. And Mr. Tom, you got a few things to share with us on the futures. It seems like almost every day, every other day, I'm getting something from Simon or from you guys over there at MIAX telling me there's yet another record out there in the land of Spike's futures, sir. So catch us up. What's been lighting up the tape out there in the land of the futures?
All's been pretty good. Well, I feel like, I see a lot of headlines about, new highs in the S&P, new highs in this. And then, we keep hitting these volume records. It's been, it's feeling pretty good. We ended August with, on the Spike's futures, trading around 86,000 of them. We had average daily volume just south of 4,000. September, we kicked off with a big bang. We had September 1st, 10,500 approximately trade. And then, yesterday was a pretty good day with 7,500. Today's looking pretty good as well. So, a lot more interest in the product, a lot more, folks getting involved and trading the product. So it's been, it's a good story to tell. And also in general, the market quality, as far as bid offer spread and size displayed has been feeling much, it looks great. We've had a lot of people comment on it in a positive way. So, displaying sizes around 75 contracts on each side, which is decent and, provides enough liquidity for folks to get involved. And, it's been, and usually, pretty much a tick wide for the majority of the day. So, things are feeling pretty good. And now I saw some options go through the market today too, as well. So, we just keep plugging away and introducing to new market participants.
I mean, you're talking about Spike's futures lighting it up out there coming into showtime here. Well, first off, we have the numbers from OCC, like I mentioned. And in the realm of VIX futures last month, not exactly blowing the doors off. If you've been listening for a while to the show, listeners, since the pandemic, we saw vol pop and then has been gradually trending downward pretty much ever since. And we didn't see the commensurate explosion in VIX futures volume that you might expect. And in fact, it's been one of the few dark spots on pretty much the OCC numbers month after month. And that continued for August. August was the most active August in the history of the options business. And yet, futures, once again, dropping total VIX futures volume. Remember, OCC pretty much just clears VIX futures. 4.1 million. That's a 1.3% decrease. So yet again, VIX futures trending in the wrong direction. And speaking of trending in the wrong direction, he was, but I think we got him back. The Rock Lobster has returned to us from the hinterlands of Maine. So, Mr. Rock Lobster, if you want to finish your thought on broad market volatility, have at it. And then B, what is lighting up your tape out there in the world of VIX futures, sir?
Well, so broad market volatility, I was trying to, there isn't a cellar of juice on the downside like there used to be. Because the vol's not down there. That's real simple. You've got 8% realized vol, and you still have like an 11.5% at the money for 30 days. So there's less vol sellers there. And that's where all, the vol sellers are short-term. Like they'll take the short-term risk because the market's not moving very much. Realized vol super low. And you can see those, you got a lot of single-digit vols, but they're not out in the, what I would call the longer term, right? Those longer term vols. So I think, and that contributes to a really steep curve for VIX, really steep forward vol curve. And that's the condition we got. And to be honest, as long as this COVID is here and people are freaked out and the Fed's doing their thing, I don't think it's going to go away. It's going to be with us for the foreseeable future. So, and as I recall, the Thompson guys, I like their saying, money in VIX is made below 16 and above 20. And I still think that that's the case. So you're not going to get a lot of excitement out of your vol trades until, like Tom says, there's a catalyst to move the ball one way or the other. And I think we're just stuck here. Doesn't mean the market can't go to whatever, 45, 45.50, 4,600. I mean, it doesn't seem like there's a top really. So the trend is still up. So I don't know. It's certainly something I don't want to get in the way of. That's for sure.
Indeed. We don't want to get in the way of all that options paper either. So let's keep on rolling into that. Coming into today, we saw Spike's top OI still dominated by pretty much the same positions that it has been the last few weeks. We got that SEP 24.30 vertical versus the SEP 21.17 put vertical there. Both of those pretty much up about 1,000 times each. But Tom, it seems like that tail is changing. That worm is turning pretty much as we speak. Looks like we're going to have some new contenders here for the Spikes throne. People like the upside in Spikes. Looks like we got the Spike October 23.30 versus the 17 puts going up for some size, sir. Why don't you break down what we're seeing out there today, Tom?
Yeah, it looks like earlier today, it's hard for me to tell which way folks are going, but it looks, I would assume this is it's an assumption just based on the, this is some call spread buying, maybe selling some put to finance it. But it's just interesting to see that there's some trades out there today, and some of the Septembers are still on the books. Yeah, they didn't roll those out. So not a ton of color on it, but just it looks like that someone's involved today. Sorry, not a ton of color on it.
Someone is indeed involved today, and it does look like someone. Looks like from the way it's shaping up here, looks like someone selling put and buying that vertical, which if you've been paying attention to Spikes for a while, it does seem like folks like to play that upside, which again is the typical use case out there for volatility products. So we'll file that under the to be watched category along with these others verticals. In the past, people have been doing a lot of 1x2, selling one, buying two out there in Spikes options as well. So it does seem like the folks like themselves a little bit of upside out here. Let's go on out to the land of VIX options, see what's lighting it up. The ADV ticked up a little bit since our last show. It's up to 419 now. It's up about 18,000 from this time last show. So that's up. That's firmly up now. We're seeing it well back north of 400K, which it was trending in the other direction. Then again, that's what makes all these numbers for August so crazy, is that this is August. We just finished up the dog days of summer here. You could argue we're still kind of in them to a degree. So the notion that we're putting any paper up, if you've been paying attention to these markets for any length of time, these are not exactly the hot volume times a year, and yet seeing records across the board. So that's intriguing. Not sure if we'll hit a record out there today, but might have a good chance of breaking the ADV out there in VIX again. Coming into, as of a few minutes ago, we're closing in on 250,000 contracts, about 240,000 contracts on the tape right now. Let's break down what are the top 10 sizable positions. What are the big open positions out there in VIX land right now? Well, let's find out. Number 10 cost you 166,000 contracts to break into the top 10 this week, listeners. That gets you to the SEP 30s. SEP 30s. By the way, it is 60-40 puts to calls still in the top 10 out there in VIX land. So read into that what you will. Number 9, 173,000 of the SEP 16 puts. Number 8, our second of 4 calls here, 178,000 of the SEP 35. So it looks like Spike's not the only place where folks like themselves a wee bit of upside. Number 7, 182,000 of the SEP 18 puts. Number 6, 188,000 of the SEP 17 puts. Number 5, $1.98 of the NOV 60s. Again, my favorite strikes out there. People love the NOV 60s. They've been open for a while. Number 4, 206,000 of the SEP 25s, our fourth and final call in the top 10. Then we go to number 3, 213,000 of the October 14 puts. Number 2, 232,000 of the October 17 puts. And number 1 out there are the SEP 15 puts, 254,000 of those bad boys. So people were wondering for a while, were those SEP 25s, was that a replacement for that July 25-40 vertical that didn't exactly work out too well? Don't see the 40 leg against it, really, and the 25s haven't done as much size as that other spread did, but it is interesting that someone is back open for size again on that strike, and if it is the same person, seems like at least for now they're 0 for 2 on that 25 strike. out there. Let's break down some of the hot action that went up this week, and I use hot in air quotes. It wasn't the most explosive of weeks. Like we said, right now, almost 250,000 contracts on the tape out there. The number one most active contract today in VIX land, the SEP 25, 17,000 of those bad boys, followed by number two, also 17,000 of the October 17 puts. Number three, almost 16K of the October 20 puts. Number four, 15,000 of the SEP 20s. And rounding out the top five today, about 14,000 of the SEP 35. So back to that 35 strike. Yesterday, a little bit more paper, not much. 323,000 was the number yesterday. The most active contract yesterday, 55, almost 56,000 of the SEP 17 puts. So that's nothing to sneeze at on an otherwise fairly light day. Followed by number two, the SEP 18 puts with about 20,000. Number three, the October 70s, 7 O's, 16,000 of those. Number four, it seems like always one of these weird aberrant call strikes is sneaking in here every day. Number three, 13,000 of the SEP 16 puts. And number five on Thursday, 11,500 of the September 20s. Out to Wednesday, a little bit more paper there as well, 475,000 contracts. In fact, so far, that is the most active day of the week. 33,000 was the number one most active contract that gets you to the SEP 17 puts. Number two, 30K of the NOV 17 puts, so maybe some time spread / roll action. Number three, 26,000 of the DEES 23 puts. Number four, 26,000 of the SEP 16 puts. And rounding out the top five on Wednesday, 25,000 of the DEES 22 puts. So maybe some DEES put verticals going up there as well. Tuesday, 394,000 contracts on the tape. The most active contract, about 46,000 of the OC 17 puts. 20K of the OC 19 puts for number two. Looks like a bit of a 1x2 there. Number three, 18,500 of the SEP 17 puts. Number four, 14,000 the October 18 puts, and rounding out the top five on Tuesday, about 14,000 of the SEP 15 puts. Monday, pretty much, well, looks like today's probably going to beat it. So Monday looking like the most anemic day of the week. Only 296,000 contracts on the tape. The most active contract, 26, almost 27,000 of the October 95 calls. In fact, it looks like just a funky call palooza was all the paper on Monday, listeners. Number one, 26,000 of the OC 95s. Number two, 19,500 of the SEP 65s. Number three, 15,500 of the OC 70s. Number four, 13,300 of the October pars, the 100 calls. Yes, those went up on Monday. And rounding out the top five on Monday, we did have one put, about 11,000 of the SEP 17 puts. So my goodness, Monday was the day, listeners, if you wanted to get some upside action. 95s, 65s, 70s, and pars, all trading in SEP in October. Interesting stuff. Mr. Rock Lobster, first off, how many of these October pars did you buy? And then secondly, any other paper lighting up your tape this week, sir?
Well, I mean, puts are still interesting to me, although I've been trying to close them. But I think looking at the volume, I think people have an unreasonable, let's not say unreasonable, okay? But I think some of the meanness is carrying over where, you know, GME was trading $25 and then people got rich buying the hundreds. I think people see, I think people see VIX and they're like, oh, it's going to work just the way that VIX does. Not quite like that. So it doesn't mean VIX can go up or spikes can go up like anything like that. But I find that to be interesting upside paper. Come in and buy. They just come in and fly. You know, you can buy those. You can buy those upside options for whatever they cost. You can also buy call spreads close to the money in VIX for about the same price that are way have a better chance of making money on the upside. So if anything, we've been trying to sample some of the cheap puts, at least at Option Pit, trying to grab some of the 15 puts. I mean, you can get all you want for a nickel, which is quite amazing with 2 weeks to go, right? VIX is 16.5, and you can get all the 15 puts you want for a nickel. So, you know, I think, again, the way I look at this from a trade point of view is, you know, you have to be realistic. And you the reality is that you just have this floor. So I can see how people want to buy the upside, and I think they're taking some of this memeness and they're bringing it into VIX. They're going to bring it into spikes because they think the products work similarly. And again, I think they're going to get a rude awakening, basically.
Just trying to figure out what they did there on that upside on Monday. It was like a lot of selling. It didn't go up as a spread. It went up sometimes hours apart. Someone had a huge axe to grind on the upside. 19,152 of the OCK 95s for a whopping dime. You got OCK 70s going up 15,400 times. This was like an hour and a half later for nearly 26 cents, but those went up late. And then maybe have somewhere in the middle there, the OCK pars going up, actually the same time as the 70s. So the 70s and the pars were vertical, but the numbers don't line up. 13,290 of the OCK pars for a dime as well. Those are also late. So the executions are all over the place here. Listeners, it's not quite entirely clear what the hell they were up to out here, but a lot of crazy upside afoot. Seems like most of it on the selling side, which is at least something. They're not coming out there and just gobbling up a ton of OCK pars and thinking they've done their due diligence for trading and hedging and risk management out there. But then again, we have seen crazier things happen out there. Let's move on out now. Let's see what's crazy out there in the land of the products you folks love to fade. Let's start with VXX. Coming into showtime, we had VXX a little bit north of the 25 handle, about a 25.15 or so. That puts it down about 0.6 of a point. Looks like it's flirting with the 25 handle right now, about to break it. So that gets it down about 0.75 of a point on the week. So a little bit of erosion kicking in out there for VXX. A decent amount of paper on the tape out there, 172,000. So this is not one of those days where VXX is trading more than VIX. We have seen that in the last couple of weeks. Not today, but decent paper, 172,000. The ADV is 211 out there. It's down about 1,000 from this time last week. Let's see what the top positions are out there in VXX. Half of the top 10 in VXX is the pre-split adjusted stuff. Let's just do a top 5 here, save ourselves having to regale you with the 12 puts and everything else. The bottom of the top 5 here, still VXX1, so the pre-split adjusted. Got about 23,000 of the SEP9 puts. Number 4, back to actual VXX, 23,500, the SEP24 puts. Number 3, 24,000 of the SEP40s. Number 2, about 25,000 of the SEP27 puts. And the number 1 position out there in VXX still, the VXX1, 32,500 of these SEP10 calls. Overall, in the top 10, it's about 60-40 puts to calls out there. Let's see if anything lighting it up out there today of note. Seems like it's mostly paper going the way of the dodo today. The most active contract are the SEP25 puts going away today, which again, not surprising. About 21,000 of those. We're hovering right at that 25 strike now, so those puts are flirting with relevance. Number 2, about 9,000, or about 8,000 actually, the SEP26 calls. Number 3, 7,300 of the SEP26 halves. Number 4, 7,300 as well, the SEP25 halves. And rounding out the top 5 today, we actually go out to monthly SEP 35 calls with about 6,000 of those bad boys. Mr. Rock Lobster, you crazies out there in the pit chat, any of them slinging any VXX these days, sir?
Well, we are actually. So a lot of the trades we like in the VXX, I like because VIX cash basically is not going down anymore. I like a lot of the 1x2 put spreads, buy 1, sell 2 on expiration weeks. We've been doing a lot of like just out of the money calendars. Theoretical decay for VXX is around 20 cents a day. So you get that kind of the steep contango with a decent decay profile. So as a trade, I don't think it's bad. So like broken wing butterflies and stuff like that. But there's still like that. If you look at VXX a month ago, I don't think VIX has done a whole heck of a lot in that time. And, we've had some gyration, but, VXX still decays. It's just not a very exciting trade like, we're used to kind of having. So, a month ago, VXX was $30.37. Today it's $25.07. Okay. And you've got, I'm sorry. Yes, I want to make sure I got the right number there. Yeah. Just right around 25. And then, but VIX during that time, right? Let's take a little look-see here as I get my data up. I just want to be a little more accurate. I guess I got a little bit more we had a little bit more of a drop in VIX. So like closing price a month ago was 1833 and VIX is 1651. So you had about 1 3/4 point drop in VIX cash, about a 5-point drop in VXX. So again, consistent with like the futures kind of melting. It's not a very exciting trade. But I think, for people that like the 1x2s and the credit spreads and stuff like that, I think it's working. As long as you do a little upside hedge or something, again, I think you can trade that floor around 16, and just go with the decay profile. So, there is interesting things. So like a theoretical low for VXX for this VIX cycle to October is like $18, 18.25, something like that. So, I mean, you can trade around that stuff. Like it's very hard for it to go down. So if it's hard for something to go down, you kind of trade it like that. And it's just not going to go down fast, right? So if you're patient, if you want a patient vol trade, that trade I think exists. And that's what I'm doing on our Vol Trade Club and some of the stuff Mark's been putting on. It's not sexy. It's kind of boring. But that's what you have when you have kind of a locked up downside in VIX. So I don't think it's going to change anytime soon, because I don't think we're just going to walk in and the vol's going to be down 2 points in VIX. I don't see how that happens. Doesn't mean it can't, but I'm trying to think of a way. Like somebody has to do some kind of magic braille type of crap to make that work. So as of right now, I just think that's where things are, and I don't think it's going to change. It's not going to change a whole lot as of right now. So I can see people buying puts. I haven't seen a lot of 1x2 put action for activity, which probably means it's a good thing. It's a good thing for me because that means nobody's doing it. So better for me. People aren't really doing it. So that's what we got.
I like that. The patient vol trade, because you're right. VXX does seem to be the more patient of the two. It's a little bit more forgiving of those. You're right. Those kind of ratios and those 1x2 and the flies out there in VXX. You have less of a chance of just blowing through your strikes the way UVXY tends to just dance to the beat of its own drummer. Speaking of UVXY, let's go on out there. It was at about 21.25 when we kicked off the show. It puts it down about exactly a point from this time last week. So if you have a whole bunch of nothing in the main vol products, that's usually going to translate into a little bit of downside in products like UVXY. That's pretty much what we saw this week. The ADV is pretty much unched yet again, which is weird. Last week it was 134,000. The week before it was 134,000. This week, yet again, 134,000. Not a big change out there, and doesn't seem like today's going to change it at all. About 80,000 contracts on the tape as of a few minutes ago. Let's look at the top positions out there first. Again, UVXY, similar to VXX, still kind of dominated by those legacy pre-split adjusted positions. So we'll just do a top 5 out there. By the way, the top 10 in UVXY, exactly 50-50 calls to puts. So read into that what you will. Number 5, 8,700 of the SEP 75s. That's right. We were talking about these last week. Someone used to love the AUG 70s, and now they have discovered the SEP 75s. I joked about mocking them earlier, but then we realized what these people are getting for these, and they're getting real money to sell these 70 and 75 strikes in UVXY. So I do not mock them anymore. They clearly have discovered. In fact, I joked on the show last week. We're not going to talk about it anymore because it's kind of the one of the secret little vol gold mines lurking out there. We don't want the word to get out. So if you're listening, don't tell anybody. It's a secret. Number 5, 8,700 of the SEP 75s. Number 4, 9,300 of the Jan 1 puts. Those are the old school legacy UVXY 1. Number 3, 9,300 as well of the SEP going out today. 22 calls. Number 2, actually, 9,700. The SEP 21 puts also going the way of the dodo today. And the number 1 position out there, about 11,000 of the SEP 20 puts. Again, going the way of the dodo today. It does seem like pretty much the 21 puts are the only ones that are kind of in flux right now in terms of will make it by the end of the day or not. So let's go on out to what's lighting it up out there today. A decent paper out there too. Like we said, not a ton of volume, but there's actually some decent activity. About 10,000 contracts going up for number 1 out there today. That's the SEP 22s going the way of the dodo today, followed by the SEP 22 calls as well, also going out next week. So probably a little bit of a roll, about 5,000 of those. It's like maybe they got burned on those because that's not usually with the house money roll. You're seeing it the other way. You're seeing it 1x2. This is 2x1. So I'm guessing the 22s didn't work out perhaps as they planned. Number 3, 4,500 of the SEP 21 puts going out today. Number 4, about 3,000 of the SEP 21 calls. Ditto going out today. And number 5 out there, we got about 3,000 of the SEP 21s going out next week as well. Mr. Rock Lobster, UVXY seems a little bit more willing to provide on the downside front these days, sir. What's lighting up your tape out there these days?
Yeah, that's another one. Like, just buy the at-the-money put and wait a week. Or just buy the slightly in-the-money put and wait a week. That's been the trade here just because the dollars are cheap and they generate potentially good money. So that's what essentially that's what we've been doing there. Nothing, super exciting, but that's been the trade, at least for the last couple of weeks. And that's, that is from a volume point of view, like what else do you do there? I mean, and how much money do you want to spend on buying upside in UVXY? It's like, you don't want to do that. And there's still actually some relative vol to sell. Like there's another thing where the vol of vol is actually not that low. It's still pretty pumped up, relative. It's not as high as it's been in the past, but considering where the market is, it's still pretty beefy numbers. So, I mean, it's still a better trade to kind of sell that stuff, I think, to be honest. But I don't sell a lot of premium. I'll sell spreads, but I don't sell a lot of naked options. So for me, it's kind of a trade in the middle, so to speak.
Trade in the middle. Let's see if we're in the middle or if we're actually pushing some extremes here when it comes to earnings volatility. Remember last week we had Matt from Orats on the show. He's kind of the keeper of all the earnings volatility data. We're coming towards the latter portion of the season. Still had some big names popping off this week. We had Zoom after the bell on Monday. Our old friend from the Odd Block, Stone Cold, on Monday as well. We had CHWY on Wednesday. We had Broadcom and Duluth on Thursday. So still some decent names out there to keep an eye on out there. And in terms of the season, it's something Matt and I have been talking about ever since the pandemic began. When is that moment going to happen? When are we going to maybe see that inflection point where vol is going to mean something again and earnings are going to mean something again from a volatility perspective? And perhaps, dare I say it, maybe we're in it right now because I was seeing some names starting to outperform. Earlier this week, we had on the first, we had Five Below. They're on the, I guess you can call it the premium dollar store sector. They're popping off on the first. They were at 216 going into their announcement. They were pricing in 6.1%. They delivered nearly 12%, nearly double. That's something we haven't seen in quite some time, at least not to any extensive degree. CHWY was on the first after the bell as well. 87.5 is where their stock was. They were pricing in 7.3%. They delivered nearly 9%. So anything that even comes close to what they're pricing in is a big deal these days. And we're seeing that more and more. In fact, also looking at the overall season report, remember, we crunch the numbers in a lot of different ways. You can find them for yourselves, theoptionsinsider.com. Click on that options news and articles tab on the homepage. You'll see a whole bunch of stuff there. You'll see a whole section called earnings reports. Click on that. You will see the earnings move reports, which is what the names are pricing in ahead of their announcement. You'll have the earnings move results reports, which is how they actually performed compared to what they're pricing in. And then we also have the earnings season reports, which takes it all and aggregates it all together and gives you a report for the season. And if you look at that season report right now, we're hovering at about an 86%, which is pretty much the best we've seen since the start of the pandemic. I'm hard pressed to recall another season that was even close to this out here. And the last few weeks of the season here, I mean, we started off decent, 76%. But then we dropped like this. Then we got to what we normally expect these days for earnings volatility. Week 2 was 57%, so pretty much got cut in half. Week 3 was 67%. Then again, the worm started to turn towards the latter portion of the season. Week 4, 107%. And week 5, hanging out at pretty much a break even right now, 100%. So that rounds out to about an 86% right now, which is the most optimistic we've seen in earnings season in quite some time. Again, you're still not making money. If you bought that basket of earnings vol, you're still losing money, but you're losing a lot less than, let's say, you're not getting 50 cents back on the dollar like you were in the kind of the dark days of the pandemic out there. So interesting stuff afoot. That's something we definitely want to keep an eye on and see if that continues to be the case. Again, you guys can get all that data for yourselves. TheOptionsInsider.com. Click on the Options, News, and Articles tab to begin your journey to the dark side as we begin our journey into the Volatility voicemail.
It's time to share your thoughts and opinions with your fellow volatility traders. It's time to check the Volatility voicemail. Make your voice heard by dialing 779-669-4VOL. Posting a comment on the optionsinsider.com, sending an email to questions@theoptionsinsider.com, or posting your questions to twitter.com/options. or facebook.com/theoptionsinsider.
All right, welcome to the Vol voicemail, the portion of the show where you guys ask us questions. We also turn the spotlight back on you. Really quickly want to pay off last week's poll we were talking about on the show. We asked you, what do you feel is the latest driver, I should say, the latest round of turbulence/volatility out there in the marketplace? Gave you 4 choices: the Delta variant, Afghanistan, the Fed tapering concerns, or overall market valuation concerns. The Fed won with about 55%, followed by Delta variant number 2, about 20%, and then market valuation concerns number 3 with nearly 14%, and rounding out the list there, Afghanistan, only 12%. This week, the question is hot and heavy right now. You guys can play along at Options on Twitter. If you're listening live, you should have a chance to still play. If you're listening after the fact, I think it'll be done by then. It's got about exactly 2 hours left, and we still have oddities and everything else to go today. So you probably won't have it in your hot little hands until after this poll is done. But you had all week to play. A lot of you have. And right now, I won't say where we are right quite yet. But we're asking you right now, which level will we hit first? Very simple question this week. The S&P 4750, Bitcoin of 60,000, VIX of 13, or gold of 2,000. Tom, we shall start with you, sir. If you have a vote, have at it. But more importantly, where do you think our audience is lining up right now, sir?
I feel like your audience might be lining up. I'm trying to think of I'm going to throw in the S&P 4750 is where your audience is lining up.
Interesting. S&P 4750. I can neither confirm nor deny yet that is the answer. Let's go on out now to the Rock Lobster. Mr. Rock Lobster, what is your thought? And more importantly, where do you think our audience is falling today, sir?
You know, one of these days I'll figure out how to do this show. One day. I think, to be honest,
when the show is over, you will understand how to do it.
Still at twos. Where will we go first? I think personally, the crowd is saying Bitcoin 60,000, but for me, I think gold 2,000.
Interesting. Vote for gold. Well, Mr. Rock Lobster, you are alone in the gold love, because gold only getting 9% here on the poll today. Right now, Tom had it. S&P 4750, 43.2% of the vote right now, followed by Bitcoin 60K, 30.6% for number 2. VIX coming in number 3, VIX of 13. That seemed like it was a little bit more doable earlier this week than it does now. The 17.1%, and rounding out the 4 there, we got gold at $2,000 with only a paltry 9%. Let's see here. I guess Mr. Rock Lobster, you could weigh in on this one. He's asking about some meatball stuff. He probably can weigh in on this. He says, hello. Well, hello, John Kwan. He says, I've been listening to Vol Views and the Option Block, and I keep hearing snippets about Mark's Gamma Radar. He puts in parentheses Gamdar. Is that what you call it? It's a horrible name if that's the case. He says, I've been reading about gamma hedging, GEX, flip points, etc. for the past few weeks, and I've been trying to incorporate it into my trading. I'm wondering if there's a resource to read about how Mark uses gamma, or can this be explained further? Also, I think an interesting topic could be how gamma impacts market makers' hedges and what happens when an underlying price explodes. And he puts in parentheses, for example, GameStop today. I think I'm starting to understand the interplay of hedging, gamma, out of the money, open interest, fast moves in price, and the resulting gamma squeeze. But it would be great to hear it from the pros. Well, lastly, I'm enjoying the shows. Who knew deep diving into all things options could be entertaining? Well, welcome to the party, John. I'm glad to see you joining the fun there. You are far from alone. A lot of people discovering the network out there these days. Yeah, we work hard to try to make all these various options-oriented topics that can be kind of dry. We work hard to make them at least fun to listen to while we're deep diving into all this fun stuff like gamma squeezing. But it does seem like everyone's got gamma squeezes and gamma hedging and the impact of gamma on the brain. We're getting a lot of these questions out there these days. So, Mr. Rock Lobster, we'll start with you because he directly addresses your, as he puts it, the GAM. I'm going to start calling it the GAMDAR because that just cracks me up. He wants to know if you have any resources you could share about the GAMDAR. And then also maybe moving beyond that in general, what are your thoughts on, this is kind of a hot topic. People out there, they frequently misrepresent options in this scenario. They make them seem like options have these magical powers to suck stocks all over the place around expiration. So what are your views on that as well, sir?
So the first thing is, at least I got the thing. At least I got the mute button right. So Mark's Gamma Radar is based on volume and implied vol change and activity at certain strikes. So that's his the Gamma Radar he helped design to kind of basically, the easiest way to think about it is like following days of clustered activity. So, is it something that you want to ride or fix? So that's in Robinhood Radar, and then he puts out the stocks that have exhibited certain characteristics if you're a Robinhood trader. So that's something you can subscribe to, and he puts that out once a week, and he puts out trade ideas as well. So that's number one. And the second thing is, so there's always something, I believe, to watching volume, because like if you're a game theory person or something like that, the fact that people are buying options, I think that moves the needle a little bit on expectations and things like that. Like, why are they buying all these calls? Doesn't mean they're necessarily right, but it does kind of sway sentiment a little bit. So I think there is definitely something to activity. So I do watch activity. It just depends on the style of trade that you want. So to answer that question, to figure out all the interplays of everything, like you kind of got to figure it out. I know on Twitter it's very popular, like dealer gamma and all that. And yeah, certainly there's squeezable stuff. It just depends on what's driving the market though at a particular time. So you never know exactly what the big driver of, Tom was saying earlier, like what's the big driver, the new catalyst? So you don't really know. So like you could have all the, there could be no dealer position at all on a strike, but if the market decides to go down 3% in a day, it's going to go down 3% a day. So I think there might be a little to, there's always something to hedging, like a big position, like we saw the whale last year. I think it was SoftBank, right? Just bought billions and billions of dollars worth of juice in a market that was already short vol. So again, there's remember the liquidity provider prices on inventory, right? So is the vol going to move if their inventory doesn't change, right? Probably not, right? But if their inventory has to change massively, that's where you see the vol move up and down. And right now, that's why I don't think you see VIX going below 16, because the liquidity provider is not the net buyer of contracts 30 days out. So, I mean, so part of this is just, you used to stand in a pit and traded. I did for a long time. You did for a long time. And you have an idea what moves pricing. In an electronic marketplace, just things move faster. They move faster because the liquidity provider has to move faster. Because you can't fade, right? In the old days, you come to the floor, somebody want to buy 1,000, you just move the market up a quarter and they can't do anything. These days, right, people can still hit that buy button, and take out all the available liquidity, because there's a lot of posted liquidity as opposed to the old days. So, you put all those factors together, and that's why, having tools that sort of aggregate information for you that kind of helps you where there's clusters of buyers. That's what Mark's been doing with the Gamma Radar. And it showed some good results. So it's just one of those things where you have to kind of decide what hill that you want to stand on as far as the type of trade you want, and see what, let's say, what short-term indicator is the one that you want to use, and then just try to create a disciplined trade around it. So
By
Anyway,
the way, it is Gamdar now. It's officially been rebranded Gamdar because that just cracks me up. The Gamdar. All right, Tom, I've waited on this many times in the past, so I want to get your thoughts on this. You've been on all sides of this. You've been on the risk management side. You've been on the market making liquidity side, sometimes on the customer side as well. What do you think about, the latter portion of his question, how gamma impacts market maker hedges and what happens when the underlying price explodes and all of the interplay, particularly around those latter points in the expiration cycle, around expiration, Tom? What are your thoughts on that?
Yeah, well, the one thing I'll say is that the last part, like when the market explodes, that's just, hopefully you're on the right side. There's not much you can do in that situation because you just have to. Most people have to cover, and other ones just going to take their profit. But the one thing I was going to say is just overall, I mean, you got to think of gamma and volatility as statistical measures. So if you're looking at being more systematic about your approach, you want to factor in how many standard deviations the market's moving today relative to the volatility levels that are implying that move. And what your bet was all about to begin with, what position you were putting on to begin with. I also think you want to keep in mind some of the, as Andrew said, have some indicators. I think you want to know, just different technical levels, different, beyond the strike with a lot of open interest. There could also be a technical level there as well. So that's something to be aware of. I'm not a big, I actually, support technical analysis quite a bit, but I usually default to someone else to analyze it for me. But it's definitely something to keep in mind, just some of those different levels. And then as far as, the dealer gamma and stuff, those I've seen a lot of those reports in the past. And, many times I've had the opposite position. I was a dealer and just there's a lot of OTC trades that go on. There's a lot of, variance swaps, other products that can affect those numbers. So I would take those with a bit of a grain of salt. They're based off information that's publicly available, and there's a lot of unpublicly available information that are embedded in a lot of trading books that you got to keep that in mind. So yeah, I just that's I'll leave it there because I know we're getting close to the end of the show here, but yeah, good question.
Yeah, this is the topic everyone has on their brain these days. I got a feeling we just talked about it on boot camp again this week. We'll talk about it. I have a feeling again soon on the network. I feel bad here for Matt Detroitberg. He was listening to us live talk about UVXY, saying just buy a put and come back in a week. So I wish I did that months ago. My calls are at 0, but at least I have until January for it to bounce. Yeah, I feel for you, Matt. I like your handle, by the way, Matt Detroitberg. Yeah, UVXY calls, that's a rough way to go. We've said it many times. I wish you listened to this show earlier. Could have probably maybe saved yourself a little money. He also asks an interesting thought question. What happens when VIX goes to 0? Could happen in this market. Well, it really can't happen if you think about it. But that's an interesting thought question. We've discussed this a few years back on the show when Russell was still on the show. It's probably like 3 or 4 years ago now. But we had an interesting discussion about this exact topic. I wish I could remember the episode. You have to go into the archives to find it. But think about it. There's 500 stocks in the S&P 500. There's 500 moving parts. All of them can't do nothing. Unless it's halted. So really, there literally can be no 0 for VIX. I think we worked it out to be somewhere between a 5 and a 6%, around 5.5% is kind of the floor of structural volatility you're going to have just baked into the index at all times. It can't really get below that. But I'll have to go check out the episode. Maybe if I can find it, we'll share a link to it. That's a great one and a great discussion. As we keep on rolling to our final segment, it is time for the crystal ball.
It's time to peer into the future and reveal what the volatility gods hold in store. It's time to look into the crystal ball.
All right, everybody, welcome to the crystal ball here. We've been gassing on, so we're kind of coming up against it. This is, of course, the portion of the show where we try to wrestle with the vol gods, see what they have in store for us out here, listeners. And we had, let's see, coming into the end of the show, we've got spikes at about 1666 and VIX cash right around a 1640. I was at a 1715. The greasy meatball was at an 18.25. So the meatball is out. And on spikes, I'm about 0.6 of a point away. So not exactly within our 1/10 of a point margin of victory out there. Luigi, he was at 1785. So not bad either, but outside the thing. Unlimited. A lot of our listeners are playing this last week. 14 keeps going at the Columbus level. No Columbus vol this week. Options Queen. What the? 1680. Looks like you're the winner chicken dinner, man. Especially on spikes. You're 0.14 away. And I happen to have heard a little birdie has told me that it may be Options Queen's birthday today. So I don't know. You got to explain to us one day, Options Queen, where this crystal ball is you're getting it from, because you've been hitting startling bullseyes with almost ridiculous act. Are you working for a large fund? Is that what you're doing here? You crushed it. JJ 20 and a quarter. No joy there. Meets 15 even. No love there. Allen 1735. No, he's north of me. Henry 15 and about a half. Nope. Nichols 17. No joy for any of those folks. So yeah, wow. Options Queen, A, happy birthday. You win just for that. And then B, you actually win. So, well, we already sent you something. We have to send you something for your birthday now, too. Wow. You're crushing it. But that means we see, I technically am the winner this week, but I wasn't within our margin of victory. So it doesn't really count. So I'll be generous. Tom hasn't been on in a while. We'll let Tom go first. Mr. Tom, what are you feeling for this time next week, sir?
Well, you're throwing in the holiday on Monday. Markets are closed. So that's always throws in a little bit of a loop into the decision making. But I don't know. Things have been so sideways as far as for the most part. I'm gonna say a little drift lower here. Like I'm gonna call it like 15.95 in the spikes, but I have no idea.
Drift lower, 15.95. All right, and Mr. Rocklops, you weren't on last week, so you get to guess now. What are you feeling for this time next week?
Where are we? 1640 today. 1640 next week. We're stuck.
Stuck. 16 is the new 12, says the Rock Lobster. Here, it has it under the meatball. I'm going to fix that for you. 1640. All right. I kind of want to know what Options Queen has on the brain, because she's been crushing faces out there, to use a technical term. All right. 40, 1660 odd in spikes. I hate to be this close to the Rock Lobster, but I wasn't really feeling a heck of a lot of change. I'm going to say 16 quarter. Again, I don't like being that close, but that's what I'm feeling. Hit us up with your guesses, listeners, and if you're close and win like Options Queen, maybe some fun prizes headed your way. All right, we're up against it. We got to get on out of here, listeners. But remember, if you need more in your ear holes, don't worry. We got to rejigger the live, but we'll be back for all of you pro listeners in pretty much exactly an hour to break down the week's worth of unusual options activity in Options Oddities. Looking forward to seeing all of you pro folks in there. A lot of hot stuff in there. We got Apple, we got meme names, you name it. All sorts of craziness coming up in exactly an hour here. Remember, you got to be in the secret club to listen to that one. TheOptionSinsider.com/pro is the place to go. And speaking of going, Mr. Tom, if folks want to learn more about all things spikes, where should they go? What should they do, sir?
They can just go online and MIAXoptions.com/spikes. You can find all the information right there.
MIAXoptions.com/spikes, the place to go for all your info, all things spikes, including a link to a cool show called Vol Views. What more could you possibly ask for from a volatility-oriented destination? And Mr. Rocklops, if they want to check out this newfangled Gamdar for themselves, where should they go? What should they do?
Jump on over to optionbit.com and go to Robinhood Trader for memberships and sign up. I think we do like a quarterly if you're interested in. So low cost of entry with 2 live sessions per week. So people like it. So pop on in and take a look.
There you go. Get yourself some Gamdar, some capital gains, all that good stuff, and a whole bunch more. OptionPit.com is the place to go. And we got to get on out of here. We'll be rejiggering the live, so we'll be back live in exactly 55 minutes now to break down the mad world of unusual options activity. Then, of course, off for the long holiday weekend, I should say. So no option block on Monday or crypto, but we're back again next Friday. Another episode of Volatility Views. Have a good weekend, everybody.
Volatility Views is brought to you by MIAX, one of the fastest, most efficient trading platforms in the world. MIAX is proud to bring you Spikes Volatility products. Spikes options and futures are traded on the Spikes Volatility Index, SPIKE, offering pinpoint accuracy, radically faster dissemination, and a highly transparent settlement auction, all for ultra-low exchange fees. It's volatility reimagined. Learn more about spikes at MIAXoptions.com/spikes. Options and futures involve risk and are not suitable for all investors. The statements made are provided for informational purposes only and should not be relied on for financial or legal advice. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.